The phone rang in the dead of night. It was a call that would send shockwaves through the global economy. For half a century, a single elite institution had secretly wielded unbelievable power over international trade, national interests, and the very framework of modern finance. But nobody, aside from a select few, seemed fully aware of it, until a leaked document started circulating in the depths of the internet. Was this the beginning of the end for this hidden empire? This revelation takes us into the intricate web of alliances, secret meetings, and sheer economic muscle that drive our world. But before we get swept away by the pulse-pounding urgency of modern conspiracies, let's step back for a moment and dig into the reasons why many believe a select few hold the reins of our global economic horse. The year was 1944, and the echoes of World War II were still tormenting the world. Global leaders recognized the necessity for a new economic order, one that would prevent another catastrophic depression. Hence, the Bretton Woods Conference convened, spilling into creation institutions that would solidify the global economic balance: the International Monetary Fund, IMF, and the World Bank. With the U.S. dollar pegged to gold and other currencies pegged to the dollar, a transnational network was cast, a cash-driven web with many guardians. Almost 8 decades later, the setup still pulses, albeit evolved, with financial heavyweights like the IMF remaining paramount. With its 190 member countries and a stunning loan power of nearly $1 trillion, the IMF doesn't just toss cash at countries in economic distress, it imposes structural adjustment programs. These programs demand significant policy changes in exchange for financial help, tightening the grip of monetary superpowers. This process creates a dependency cycle that critics argue benefits wealthy nations, leaving struggling countries tethered to a new age imperialism. But the machinery of power turns on more than just these institutions. Meet the central banks, with the U.S. Federal Reserve holding an unparalleled place on a rock-steady pedestal. It's not just any bank, it's the heartbeat of global liquidity. When the Fed adjusts interest rates, announces quantitative easing, or tightens its monetary belts, ripples are felt worldwide, dictating capital flow, investment exchange rates, and even personal savings. Yet behind these colossal financial behemoths, some argue there's an ethereal puppet master pulling the strings, the elusive 1%. We're talking about families and individuals whose wealth seems inscrutable, sheltered beneath layers of investments and holdings. Take, for instance, the Rothschilds, a name long echoed in conspiracy theories. Today, the family wealth is vastly distributed across financial markets, from multinational corporations to influential think tanks. Their mythos crescendos on commands over swaths of economic territories. What about the big guns of modern tech, the real titans of our time? With trillion-dollar companies like Apple, Amazon, and Google, are these not the new monarchs of economic governance? With their reach extending beyond just tech into spaces of media, defense, and artificial intelligence, they too impact economies worldwide. It's said that the combined market cap of Apple and Amazon could dwarf entire nations' GDPs. Also, BlackRock, the planet's largest asset manager with over $8 trillion AUM, channels investments into thousands of companies, thereby influencing numerous economies. Herein lies the twist. We often perceive these forces in isolation, compartmentalizing institutions, families, and corporations, but in reality, the overlap is intricate. The board members of these institutions often come from the same elite schools. Their decision-makers socialize and strategize at events like the World Economic Forum. Welcome to the financial merry-go-round where allies and competitors swap seats but play the same inheriting game. Deep dive into the mechanics, and you'll grasp a complexity often glossed over. Take the derivative market, valued at over $1 quadrillion. It's so vast and intertwined that several experts liken it to an omnipotent yet unstable financial Frankenstein, vital for liquidity and risk management, but potentially devastating if mishandled. Here, a handful of financial magnates maneuver, invisibly steering economies by offering protection or potentially triggering shortfalls. The implications of concentrated economic control are profound. The most evident concern is policy imposition that prioritizes the economically potent few over the collective benefit. Additionally, there's a more blurry notion of accountability. Who holds these financial titans responsible when their colossal plays misfire? For example, during the 2008 financial meltdown, despite the personal responsibility of top banking executives, very few faced significant repercussions, leading many to lose faith in